In this video, I am going to share with you my 2024 real estate predictions for the Fraser Valley and Canadian real estate market. I was looking back at my predictions from last year, 2023, and I was a little off. Weird. But hopefully that's not the case for this year. Before I dive in and share that information with you, if you guys are enjoying my content, I would appreciate if you hit that like and subscribe button. And a reminder that if you want to book a 30-minute call with me, you can do so by clicking the Calendly link in the description below. Prediction number one, let's talk about interest rates. Last year, interest rates went up by 75 basis points. I predicted that they would go up around 25 to 50 basis points, so a little bit off there. They did increase more than expected, and this year I believe that rates are going to come down. Now, I will get specific with you on when I think that those rates will come down and when they will hold, but one thing I really am strong in believing is that rates will not go up any further in 2024. The bank meets as they do every year 8 times, and that is when they make their rate announcements. What I've done here is outline exactly the dates that the Bank of Canada meets. Their first meeting is January 24th. Now, I think that they are going to hold the rates, and I do believe that they will hold them again until June. And the reason being is because if the Bank of Canada reduces rates prior to the spring market, which is generally the busiest time of the year, the buyer demand that potential rate cut could cause may act as too large of a catalyst for the spring market. And that's why I believe that they will wait until just before the summer months, because generally the summer months are a slower time of the year. So I believe in the June 25th announcements, they will cut by 25 basis points. And then in July, another cut. I don't think that they'll do 3 cuts in a row. And then I believe in the fall, they will hold as well, because usually the fall time and the springtime are when we see the most activity in terms of sales. Finally, I do think that they're going to do one last rate cut in December, as again, December is generally a slower time of the year. Another reason I feel that the interest rates are going to come down is because the 5-year government bond has already started to come down, and that bond correlates with the 5-year fixed mortgages, which are starting to come down already. The variable rate is still going up. However, the fixed term rates have started to come down, and that's just been in the last month or so. When people that purchased at the peak of the market in the early stages of 2022, when they go to renew their 3 to 5 year fixed term, rates definitely do need to come down, because those people are going to be in for a sticker shock when they go to renew at today's rates. And that again is why I believe that the overnight lending rate should be closer to the 4% range. It shouldn't be as low as it was in 2021 and 2022, because as we saw, it just caused way too much buyer demand. And the same old story here is that we don't have enough housing supply to be able to support that type of demand. Prediction number 2 is that we will see an increase in sales activity across the Fraser Valley and I believe Canada as a whole. In 2023, the number of sales recorded was the lowest it's been in the last 10 years, and it was actually 23% lower than the 10-year average. Now, I believe there's 2 main reasons for this. It's that rates obviously continue to go up, and consumer confidence was certainly not at an all-time high. With the higher inflation rates and just the cost of living for people, there was definitely some uncertainty for people to get up and move, especially if they had locked in at a lower rate. The idea of breaking that and moving into a new home at today's posted rates, which are a lot higher than what they would have been, just didn't make sense for a lot of people. And I think that that's why we saw the low number of sales that we did in 2023. Sales year to date across the Fraser Valley is down almost 4%. Here we can see all property types in orange, and then detached townhomes and apartments. We can see that sales definitely peaked in June of 2023. Usually we do see some more sales in the fall months here, which was not the case, and it just continued to decrease throughout the remainder of the year. Now, obviously coming into the spring market or the early stages of the spring market, we can expect the number of sales to increase. And again, when rates continue to hold, that will encourage more people to come off the sidelines. Here we have monthly home sales in all of Canada. We can see they were at the highest during 2021. 2022, there was a massive decrease in the number of sales we saw, and going into 2023, it did rise, but we're still quite a ways under the 10-year average. Prediction number 3 is that sale prices will increase. Looking back at the last year, we saw that sale prices peaked in the early summer months, so in June and July, and they've been on a decline ever since. They are still up year over year for every asset class. We can see that all property types are up 3.8%. The detached detached housing market is up 7.1%, condos 6.9%, and townhomes at 5.3% increase year over year. Prices did go up, but I do believe that they will continue to rise. And again, that draws back to interest rates holding and eventually going down as predicted. I personally have seen a lot of people that have been waiting on the sidelines because of the rates being so uncertain over the past year. So the detached market increased the least out of all asset classes, and that's usually the case. When markets go up and down, it's the detached market that feels it the most. Of course, there's certain detached homes that do still sell quite quickly. For example, those that have a suite or a mortgage income helper, those are still quite hot, but the more expensive detached homes that don't have a suite have struggled over the past year and a bit. Now, what's been really interesting is watching multifamily. Condos and townhomes have been very strong throughout the year, regardless of the interest rate increases that we saw. Townhomes in particular were very hot, specifically in Langley. They were sitting at the 30 to 40% sales to active ratio throughout the entire year, which indicates a seller's market. Now, I do believe that will be the case going into 2024, and I feel the sale prices are going to remain strong and increase throughout the remainder of the year. If I had to guess a ballpark, I believe that they would increase upwards of 8 to 10% year over year. And I say that because just looking at this past year, everything increased almost 4% despite the 3 interest rate hikes we saw. Now, if we do see 3 interest rate decreases that I feel could potentially happen, I think it's fair to say that upwards of 8% increase in sale prices for all asset classes in the valley could definitely be a possibility. Prediction number 4 is that the number of active listings and new listings will rise throughout 2024. And again, this goes back to people being able to lock in at a lower interest rate than they could have in this past year. People are able to afford more and therefore more likely to list their properties to make that move. Perhaps they're upsizing or downsizing or whatever the case may be. They're more willing to do so when they don't have to break their current mortgage and enter into a rate that's much higher than the one that they were previously in. Looking at active listings on a national level, we can see that they hit an all-time low in 2022. That's when the peak of the market happened. So just everything that was being listed was selling very, very quickly. That obviously stopped as interest rate rose. There was less sales, so the active listings were increasing. And I believe that this trend will continue in 2024 as we reach a more stabilized market. Zoning in on the Fraser Valley specifically, we can see that new listings are down almost 9% year over year. And when we compare that to 2020, they're down 6.6%. And comparing that to 2018, so looking at a 5-year trend, they're down 7.6%. Everything in the townhome market for new listings was down as well. And then when we look at condos, new listings actually rose when comparing it to 2020 and comparing it to 2018. So the number of new listings in more recent times has been less impactful. And maybe that was because a lot of investors were starting to offload their investment properties, bringing some new listings onto the market, specifically in the condo sector. However, going forward, I do believe that we will continue to see more new listings and more active listings hit the market. We did go from a very intense seller's market to a more balanced to buyer's market, again, depending on what asset you're looking at. And as a result, when you're in more of a balanced market, you do tend to see those inventory levels start to rise and create a healthy market. Prediction number 5 is the type of market that we can expect each asset class to be in. I'll do my best to break it down per asset, so condos, townhomes, and detached, because they are very different types of products. When we look at the most recent stats package indicating what level each asset's in, we can see the detached market is sitting at a balanced market, so anything between 12 to 20% is a balanced market. Townhomes are sitting at 29%, which is a seller's market, and condos are sitting at 26%, which again is a seller's market. Now, townhomes, as I mentioned earlier, they were the hottest asset class throughout the year. I foresee all of the sales to active ratios increasing over the next year because sales and affordability affordability are going to improve. Now, I do feel that the detached market will hover around the 20 to 25% sales to active ratio because rates, yes, they're coming down, but they are still high. Now, take into consideration too that houses that don't have suites are going to be in more of a buyer's market, but those houses that do have income helpers, so 1 or 2 bedroom suites, those are going to be in demand. Depending on the townhome someone's buying, if that townhome complex has a high strata fee, when you look at your monthly payments, sometimes a detached home with a suite can be very similar to the cost of a townhome when you add in that monthly strata fee. And of course, over the long term, we could expect that detached home to appreciate more than a townhome would. Looking at the sales to active ratio over the past year, they were quite high at the beginning of 2023 in the spring months, and then come summertime, the sales to active ratio started to decline, but more recently have improved. And this is something I wanted to touch on, is that in the last couple of weeks, I've really felt the indications of an early spring market coming. And again, and I know I've said this a lot throughout this video, but it's so true. I really feel that people are trying to get ahead of the projected rate cuts, because as soon as that happens, I foresee a lot of people coming into the market and things starting to pick up again. So we do have a lot of buyers that are trying to get ahead of that because they don't want to be caught in a type of market where you may have to waive a home inspection or potentially be competing with another buyer to secure that property. Looking at a national level, we can see Canada here. Now, months of inventory is another way to measure the absorption rate, the same as sales to active ratio is. We've got the sales to active in red and months of inventory in blue. We can see that months of inventory right now are coming in just over the 4-month mark, which indicates a balanced market. Anything 0 to 3 months is a seller's market, 4 to 6 is a balanced, and anything over 6 months is a buyer's market. So we can see that this is at pretty healthy levels. We'd like to see it a little bit higher, but I don't believe that that's going to be the case. And again, it's because of the projected interest rate decreases that are coming in 2024. We can see this was when the market was absolutely crazy. It dropped off substantially in 2022, with slow rises seen throughout 2023 up until just before the summer months started, when we did see a decline throughout the remainder of the year and a slight uptick in the last month. One other thing that I didn't really touch on that I think is going to happen is that we are also going to see investors come back into the market. Obviously, when you can get a mortgage at a lower rate, the month-to-month financing starts to make a little bit more sense. And that's another reason why we've seen demand in the Alberta market go up so high, is because while BC and Ontario saw high sale prices and high rates, investors were turning to Alberta, where you could get, still a high rate, but the prices of homes there are substantially lower. So Edmonton and Calgary both saw a big uptick in their market, and I do think that people are going to continue to invest. BC's a long-term game. You go for appreciation here, unlike parts of Alberta, where you're going for month-to-month cash flow. But in any case, I do foresee more investors coming back to the market locally here. As long as you're going to hold on to that property for 5+ years, historically, BC always is a good place to invest. I hope you guys found my 5 predictions to be helpful. Of course, no one knows what's going to happen, but after reading a lot of articles and just being out in the field myself, this is what I foresee happening in 2024. Thanks so much for watching. I hope you guys found this helpful. If you have any specific questions that I didn't touch on or that you want more information on, please feel free to click the Calendly link and book a 30-minute call with me. And again, if you did find my information to be helpful, I would greatly appreciate if you could hit that like and subscribe button. I hope you guys all have a great year, and I will talk to you soon.